Travis, today we're talking about one of the hottest assets of 2025.
NVIDIA?
Actually, it's gold.
Gold.
What's really driving the performance, do you think? Well, gold has had a good year, trading around $4,100 an ounce, okay? Just a hair below the record at $4,360. It was just set last week. So what's behind the strength?
Well, I mean, gold, first of all, you have to know it's not like a stock or a bond. I mean, it doesn't pay dividends or interest. So there's no cash flows driving the value of gold. I mean, its price moves mainly in response to like macro forces. You're talking about inflation, you're talking about interest rates, and pretty important, like how the US dollar moves relative to other currencies. Because when real interest rates fall, and we're talking about real interest rates, we're talking about the nominal rate less inflation, right? And then you get the real interest rate. That's when gold usually does pretty well. So we've got the 10-year treasury right now hovering around 3.9%, and that's down from, we were at 4.5% earlier in the year. Inflation's still near 2.7% or maybe a little higher with some other readings. So investors at this point, they're looking at their bonds and they might see less reward for holding bonds, and gold zero yield doesn't seem unappealing given some of the price appreciation they could get with it.
Agree. And so what's driving gold's performance? First, the inflation and rates, like you said.
Yeah.
The Fed has signaled 2 rate cuts for 2025. The markets are pricing in more.
Surprise.
Shocker.
Yeah.
Whenever policy eases, gold usually moves up, doesn't it?
Yeah, it does. But the big reason, too, though, is the softer U.S. dollar, right? I mean, the dollar index, and that's the index, like how the dollar trades against foreign currencies, it slipped from around 107 to around 102 since May. And that weaker dollar means foreign investors can buy more gold for the same local currency, because you take the foreign currency, you transfer it into dollars, you buy more dollars, you can buy more gold. Yeah. And then always affecting gold's price is just geopolitical tension, right? When ongoing, let's look around the globe, Steve. We've got ongoing conflict in Eastern Europe. We've got the Middle East. We've got some U.S. elections going on where we don't know which way it's going to go. And I mean, investors are just going, there's a lot of uncertainty out there. Let's look for some safe havens. And gold usually serves that purpose.
That's definitely where you go. One stat that stands out is that global central banks, okay, this is interesting, bought about 1,200 metric tons of gold in 2024.
Right.
That's the second largest total on record, just behind China, India, and Poland.
Poland's catching a bid in there.
Poland,
huh?
That's
so how much is that in purchases?
An outlier. That's $90 billion worth of purchases, adding steady institutional demand also.
Yeah, and I've seen some charts where it looks like dollar reserves and gold reserves at central banks are converging. Like they're getting pretty much even here.
Right.
So yeah, there's a lot of supply demand going on there. But as with any asset, Steve, it's not just all upside, right? If inflation drops back toward the Fed's 2% target, which we were on track, it's kind of stalled out here.
It has.
And yields tick higher, gold could give back some of those gains moving forward. We'll see.
Yeah. And so a stronger dollar, renewed risk appetite is what you're saying, could easily shave $100 to $150 per ounce off these prices. But for now, the macro environment, the slower growth, the looser policy, and this global uncertainty that you talked about is doing gold a lot of favors, as we can tell.
Yeah. So for investors, I mean, just looking at it, how do you put it in your portfolio? I mean, gold still serves as a hedge, still serves as a diversifier, because historically when stocks slip, gold rises. I mean, it's an uncorrelated asset class.
It's safe.
You hold gold for a rainy day, right?
Absolutely. So bottom line, Travis, gold performance is being driven by lower rate expectations, a weaker dollar, and record central bank buying.
That's a big one. The weaker dollar and central bank buying are really powering this. But for anyone watching, if you have any questions about how gold fits in your portfolio or about your financial plan in general, give us a call at Allen Capital Group. We're happy to help you figure that out for you.
Yeah, just navigate the waters.
Navigate what's going on.
It's crazy. So Travis, has been great. I look forward to it next week.
Look forward to it as well.